Hey everybody, welcome to Cordant's market update for the second quarter of 2023. In this market update, we're going to hit returns year to date, what happened in the quarter, and then look at basically what's happened over the last 2 years, kind of a very different 2022 versus 2023. So we're going to break that down as it relates to some of the main themes that we looked at last quarter: value versus growth, the international market, the bond market, and inflation. So stay tuned for all that. So 2023 year to date have provided pretty good returns in the equity markets. Markets up about 14% through the end of June. In terms of what happened in the second quarter, U.S. stock market is up, beating international in the quarter, but international stocks are up, emerging market stocks up, global real estate up as well, and bond market is going to be down just a little bit in the quarter. In terms of U.S. stock market, again, kind of leading the way so far in Q2 and so far this year, large growth leading the way in U.S. stocks, followed by large cap stocks overall, and kind of the small value stocks bringing up the rear with still a positive return year to date. In terms of international developed stocks, a different story there. Value leading the way and growth kind of lagging as it relates to international stocks. And just a reminder, international stocks make up about 30% of the overall stock market across the globe. And then emerging markets are going to make up about 11%. So these are some smaller countries, less developed countries, Brazil, China, etc., make up a big chunk of the emerging market basket. There, small cap stocks actually led the way. So a bit of a mixed performance across the three main segments of the market, with large growth leading the way in the U.S., value stocks leading the way in some of the developed markets, and in the emerging markets, small cap stocks actually leading the way. As it relates to commodities, commodities were slightly down in the quarter. Obviously, for people with an allocation to commodities, that's not necessarily a good thing, but overall, commodities coming down so far this year and over the last period has helped with inflation, which we'll look at here in a little bit. So in terms of the last couple of years, really a tale of two very different years. You can see that with value and growth. Last year, value very strongly outperformed. This year, really, it's been flipped. Growth has been a strong performer. So if you look back over the last 2 years, how value has still coming out ahead over the last couple of years, really helped by limiting that downside last year when we had a bear market. What that adds up to is, despite a good 2022 for value, value is still looking attractive. Value is always going to be cheaper than growth, just by nature of definition of how these things are determined. But basically, value has been getting cheaper here in 2023, and that should mean good things going forward. Pay less for a company, for a stock, the prospective returns in the future are going to be higher. So even though value has underperformed growth so far year to date, prospective returns are good as value is cheaper. In terms of international markets, again, a tale of 2 years. Last year, international stocks outperformed. This year, it's U.S. stocks leading the way. But overall, very similar performance over the last 2 years between international and the U.S. market. Same story here with valuation. International is still cheap relative to U.S. stocks, and kind of historically cheap. So whether that's if you're looking at price to earnings, how much you're paying for $1 of earnings at a company, international stocks look very cheap on that measure. Or if you want to look at dividend yields, how much they're paying out, international stocks are looking very cheap here. So really hard to time the markets in the short run based on these valuation metrics. But if you look at a longer period of time, sort of valuation is one of the better measurements of future returns, or ranking returns in terms of like what has potentially an opportunity to outperform over the next, say, 5 or 10 years. As it relates to the bond market, a lot of movement there last year. Bonds were down last year. This year, yields are up, which is a good thing for bond investors, and they've been mostly flat year to date. And so When yields are flat, there's not a lot of price movement in bonds, and most of the returns from bonds are therefore going to come from the yield. And just a reminder, as bond yields go up, that means bond prices go down. So that's going to hurt the returns in the short term. But over the longer term, as yields go up, you have a higher expected future return with bonds. And the last trend that we want to check in on is inflation. Obviously, this has been a major trend over the last couple of years, and finally getting some good news on the inflation front. If we look at the consumer price index, basically had a 2-year low here in 2023. The lowest inflation reading, still above the Fed's target, but the lowest inflation reading we've had since 2021. So good to see that kind of trending back down, and hopefully we get to that lower inflation level that we've been accustomed to here in the US. So that's it in terms of our market update for Q2 2023. Hopefully this has been helpful, get you up to speed on everything that's been going on in the market in the last quarter. As always, would love to answer any of your questions here. So go ahead and either reply to this email, leave a comment, and happy to address those questions. Okay, thanks.